Benefits of the S Corporation. The S Corporation is a very popular form of business structure among small business owners. Similar to the LLC and the C Corporation, the S Corporation offers a corporate shield, protecting shareholders and owners from business liabilities and lawsuits. So, in a properly formed and operated S Corporation, creditors won't be able to reach the assets of the individual owners. Except for a few small exceptions, creditor recovery is limited to the assets of the S Corporation, not the assets of the individual shareholders. An S Corporation usually starts off as a regular general for-profit C Corporation, also called a C Corporation. Then, within 2 months and 15 days, all shareholders must execute and submit IRS Form 2553 to the IRS, qualifying as an S Corporation. There's a whole list of limitations on who can elect S Corporation status, but here's the general rule. The corporation must be a domestic corporation filed here in the U.S. There can be no more than 100 shareholders. For the most part, all shareholders must be individuals. So, an LLC cannot be a shareholder of an S Corporation. No non-resident alien shareholders are allowed. Permanent resident aliens or U.S. citizens only. An S Corporation can only have one class of stock. This last point is important because it means all outstanding shares of stock must confer identical rights to distribution and liquidation proceeds. Who should form an S Corporation? The S Corporation is a great business structure for the small business owner, where all owners will share in the profits and losses based on their percentage of ownership. So, let's say our S Corporation owns $100,000 in taxable income. I own 80% and you own 20%. I will be taxed on $80,000 of income and you'll be taxed on $20,000 of income. The IRS determines each shareholder's tax liability based on his or her percentage of ownership. Thus, where owners prefer a simplified tax filing, the S Corporation is treated like a pass-through entity similar to sole proprietorships, partnerships, and the LLC. The S Corporation is the preferred business structure where the business will make a profit soon after incorporation, and the owners will withdraw that profit. In other words, most of that profit will not be reinvested in the business next year. An S Corporation is not preferred when during the startup period, significant losses are expected. Starting a business is a big step, and selecting a business structure will have an impact on your tax liability. Talk to your accountant or your attorney to determine whether the S Corporation is the right business structure for you. And when you're ready, call CorpNet to incorporate your business or form an LLC. And we'll do it fast, we'll do it right, or your money back.